Hi, I'm David Bodemer, the Editorial Director for National Real Estate Investor. We're here at the Strategic Real Estate Investment Conference, and I'm here with John Schultz, who's the co-founder of Onyx Equities. Now you're speaking on the, well actually, why don't you start telling it to tell us a bit about your firm?
Well, Onyx Equities is based in New Jersey, and we invest in 4 states, New York, New Jersey, Pennsylvania, Connecticut. We are a sponsor fund.
Okay.
Our deals are basically in venture with different institutions, family offices, high net worth individuals.
Okay.
We're the operator. In each of these deals, we'll put in X amount of money, our partners put in the rest, and we work together to create value.
Okay.
We've raised 2 funds to date. We've bought over $1 billion worth of real estate since we started our endeavor. Our returns.
When did you start it?
We started in 2004.
Okay.
Our returns have been terrific. Obviously, we've been through one of the craziest real estate cycles that I've been alive for.
Sure.
I actually got started in the business when the RTC crashed.
Okay.
So I've been to this movie. It's different players,
right.
But you know, when they say experience helps, experience is going to help us in the cycle. We live in cycles, and I'm in my second one. I've been through that sort of, you know, game plan of how you navigate through a cycle going from, you know, the top to the bottom. It's always nice to be starting at the bottom. Mm-hmm. I think there's going to be tremendous value and tremendous opportunities over the next 5 years. For me, it's the most exciting point of my career. Okay. Our company is set up for it. We've lasted through, we've grown. And we're very excited about the next 5 years.
And you're speaking today on our alternative investments panel. So what is that? You know, I guess from the wealth management side, real estate often gets lumped into that bucket. So what is that sort of? Well,
I guess, you know, you have equities, stocks, bonds. You know, real estate, I guess, is classified as an alternative investment. I call it a staple investment because that's what I do.
Right.
But, you know, to, I guess, the average investor, it's an alternative investment class. It's something that you don't do on your own. You can't buy a stock, you can't buy a bond. It's not easily traded somewhere. Mm-hmm. So to me, you know, that's why they call it that. Real estate is, I think, a staple in anybody's portfolio. And when you can get in at a level where the market has completely gone back to, I think, mm-hmm. ground zero mm-hmm. on value, right? You know, it's been anywhere, and forget about New York. New York's its own planet,
sure.
Okay? But when you go into the suburbs, real estate's gone as, you know, back as 50, 60% in value.
Right.
You know, debt, we had a debt crisis. It's not as easy to get debt as it was in the past, which sort of created a little bit of the uprising in pricing. Mm-hmm, so mm-hmm. when you have real good fundamentals still in certain markets, and you could buy things, you know, 20, 30, 40, 50% less than they were trading for in the last cycle.
Right.
You know, that's an opportunity. You know, there's not as many players in the market, so I think you know, it's supply demand. There's, you know, if you have more supply than demand, pricing will stay low. So, and if debt stays where it is today, where interest rates stay low, you'll have a flow of real estate transactions that actually where the pricing will make sense.
And so, kind of looking ahead, I mean, we just had an opening panel where a lot of folks talked about uncertainty being kind of overshadowing things a little bit, but still, even with that, there's remaining a lot of opportunities to invest.
Listen, globally, you know, uncertainty is not a good thing.
Right.
When you go and wake up in the morning, you want to feel confident that you can accomplish something and that it's going to go well for you. You know, we have an election coming, we have global concerns, we've been in a real estate recession and a recession in our economy for many years. You know, you start getting used to, you know, what you're living in. Mm-hmm. It's the forest and the trees sort of concept. Sure. So you want hope, but real estate, you know, what real estate is compared to like just global investing in stocks, bonds, and other instruments, which are good to invest in. It's a local business. Everything we do mm-hmm. is in real estate. We're sitting in a piece of real estate right now.
Sure.
So it's used by everybody. It's just, so there's always going to be opportunities where a good piece of real estate can be fixed, helped mm-hmm. out because it was either over leveraged or not managed properly. Right. So, you know, we don't need a lot of opportunities to do well. I always find that in the markets that are inefficient and sort of going through a rough time, that's where your best opportunities are. You know, I like to go where nobody's going. And you know, not in my niche or my industry, I've stayed, and our company has stayed what we do and to our roots from the beginning. You know, what happens with a lot of people is as you get successful, you think you could do more things better. That's just not our philosophy. We've stayed in the same states, the same product types, and we will continue to do that throughout the market cycle. So, and you know, I'm getting older, so I got 20 years under my belt. I've made mistakes. I've seen, you know, people do well, do poorly. You know, you know, investing's a risk, no matter what investment you take, and you know, but we feel very confident in this market.
Great. All right, well, John, well, thanks so much for taking some time to share your thoughts.
Thank you.